offshore activity. This extension that was supposed to happen is at the moment suspended, delayed, could come back, as it could provide another 1 million barrel addition from offshore. We happen to be very well exposed and very long on onshore exposure because of our integrated contract. We happen to be also extremely well exposed to gas in Saudi. So for us, it's minimum or immaterial impact for this year for sure and for the foreseeable future. We see growth this year, very significant growth in almost all the countries in the Middle East. Don't expect this activity momentum to continue into next year. And this change of two projects that have been postponed, that has been canceled, that do not put on more than 10% of the total upstream spend per year, is not changing our strategy, it's not changing the game, and not changing what is the largest
and that is very good perspective to keep in that when we hear these headlines that they cross. So just to wrap up, speaking of Saudi Arabia, we just saw OPEC Plus continue the extension of their cuts. Is 80 a floor, a top? Like, how do you see the oil market?
channel. I've been willing to set the floor 18 and the oil price has stayed between 75 and 85. I expect this market to stay such, and because OPEC will continue to use OPEC Plus, continue to use their opportunity to adjust to the market demand supply equation. As you can see, maturation of the starting to go towards production plateau. We get more food on international liquid demands. Gas activity internationally continue to expand into gas security. So this combination will continue and support activity output. And I'm not going to predict, will not predict oil price, but we believe that the balance of OPEC Plus will continue to pull on the international supply that will stretch the existing resource basins internationally. Will continue to support very healthy oil price going forward.
Thanks. Do range. All right, Olivier, thanks a lot. I really appreciate your time today, Olivier Lefiche, CEO of SLB. Great job. It's worth mentioning SLB shares are higher today. And both energy is higher even as the overall market takes place. Coming up, we're going to take a look at shares of Apple. They're on the back foot. The stock's seeing a slump that has raised more than $360 billion this year in market value. It's our stock of the hour. This is the close on Bloomberg.
My phone's not working. Crypto degens in it.
All right, now for our stock of the hour, also look at Apple. It's straight day now down about 14% from its all-time.
Lots of live meme from trading and went on the live bit.
China joining us right now. We're going to be a little bit mixed as to what's going on. I'm just looking at the chart on Apple. I guess I hadn't really studied it. Wait, that's probably going to be one of the other short-term charts that's on Apple in the last 7 months.
I don't disagree with you. It's gapping lower for several days. The selling pressure is steady. So today, of course, we have these headlines around China iPhone sales in the first 6 weeks of the year being down 24% year over year. They're now the fourth best pick there in China. So the fears around China slowdown really hitting, uncertainty around iPhone growth slowing, coming together. I would say the biggest influence here, and it shows in the chart, is Warren Buffett and Berkshire Hathaway selling. If we get in the 13th app, find out that they started selling last year. That chart is the selling, it's steady selling pressure, consistent selling pressure. We don't know yet, of course, what they're selling this year. We won't know until the 13 Fs come out. But I strongly suspect that that's a big influence. But then you have to ask why. And it goes back to the iPhone, AI, it's a circular. It could maybe bounce in the near term, but then maybe get it.
Well, we should point out we did
yes.
Somehow.
Yes, and these steep corrections, bear markets even, and then it comes back. So it seems like there's a little bit of that right now.
It's still like just fire loads of cash.
Yes. All right, Abigail Doolittle, thank you so much for the latest on Apple. And of course, for me, you got to wonder as well about this plan to come up with its own software that didn't pan out. And now they're putting all their eggs in that AI basket and nothing to show for it for now.
Yeah, but maybe don't you learn exactly it's in that basket. Right.
Exactly. Right. And Apple, exciting. Yeah, not finding that. All right, coming up, we continue to count you down to the closing bells. Megan Woodman, CIO at Verdant Capital Advisors, will be joining us next. This is the close.
Why did you just share the screen instead of your face as well?
This is the countdown to the close. Guys, Scarlet Food, about 10 minutes until we get to the closing bell. The good news, Scarlet, is stocks are off the closing deal today, not by a whole lot. And I was just thinking of push here on NASDAQ, which is primarily the biggest laggard here. And you're now getting to that stage where we're really starting to test some of those technical levels. The NASDAQ 100 is right now kissing that 20 million.
Yeah, and the current catalysts are not good, whether it's headlines on Apple or Tesla. The Magnificent Seven really under pressure today. China is not helping either. With the government announcing an ambitious target of 5% GDP, but giving absolutely no details on how to get there. And just kind of in line with everything, Bitcoin is also lower after plunging to record high. I have to chuckle at that 5% number, like no days, the ambitious targets, the chart at 10%. And now it's 5%, and nobody believes them. It's ambitious, right? It's just at a different trajectory. It's still the world's second largest economy here right now. It's not paying much of a factor. Given what's going on in the U.S., we should point out once again, U.S. stocks are hovering near those session lows. Investors turning a bit cautious after hitting those record highs last week. We had a chance to catch up with Lisa Shallett, CIO at Morgan Stanley Wealth Management. He said, like the main headwind she sees for the market, well, take a listen.
I think one of the things that we're encouraging our clients to watch out for is the power of liquidity. We're moving into a period of time, the end of the first quarter, into tax season, April 15th, where market liquidity, quarter end dynamics can get, somewhat complicated. And given late in this market, we're encouraging near-term, caution.
And that was Lisa Shallett kicking us off to the close just about an hour ago. Here to help take us to those bells is Megan Horniman, CIO over at Burton's Capital Advisors. And Megan, I do want to pick up where Lisa Shallett left off a little while ago, which is the idea that some of the price action that we have seen over the last couple of months, if that is to be explained away by liquidity, finality, tax loss selling, things like that here, what does that mean going forward for any sort of appetite to continue bidding stocks higher?
I think she's got some great points. In fact, you've seen this in history when you see certain areas of the market, specifically most recently in tech, it's been Bitcoin, and you see areas of the market that are just rising on really no fundamentals except that fear of missing out, and valuations are so stretched that there may not be a significant catalyst that just makes these stocks turn around. Sometimes it's just a valuation correction. Obviously, I think Apple's leading into some of this negativity in the tech side. But right now, I just don't see the catalyst that can take them significantly higher.
Is that sort of a tacit sort of explanation as whether the AI trade is going to continue? Because that was the fuel, at least for last year, and I guess to a certain extent, part of this year.
AI is with us, it's not going anywhere, and this will continue to evolve. But you're seeing today that eventually companies are going to have to shift for what they're doing with AI, how they're evolving with AI. And what we're seeing today is, and capacity displays Apple's getting some negative reaction because they don't really have a clear plan there. I don't doubt that this isn't the last of these stocks that we see. Obviously, NVIDIA has a niche in that market because it has the chips to this. But all these companies that have been bid up just because they are associated with artificial intelligence is going to have to show some results eventually in order to support these valuations.
Show some results, some kind of outcome when it comes to AI. But what about the spending? How patient or how are investors to let companies continue to increase their capex as they incorporate AI into their operation, into their supply chain, so that they can take advantage of the productivity gain?
I think there's some level of patience because, again, this is a long-term thing. But when you're looking at valuations that are extremely high, there is going to be a time, especially when you come into like was mentioned, some of these liquidity periods around 3 years, that investors will take chips off the table. They just don't have the appetite to continue to bid these up. That's where I think that we're seeing right now, and I think that this can continue as we close out the rest of this quarter.
So if you're looking for an alternate place to move over, to rotate to, what does it look like when you consider overseas markets, emerging markets? Romania and I were chuckling over China's ambitious 5% GDP target, and the fact that they can't provide any details on that. Are emerging markets, including China, an attractive area right now?
into them right now, and you shouldn't be out of emerging markets. For the long run, emerging markets do have a part of your portfolio, but we're neutral to slightly underweight the emerging markets. You hit it right there. I mean, there's not a lot of clarity around China and what they can do. There's a geopolitical situation that continues to be risking the markets. Look at what's going on from the trade perspective in the Red Sea. This can impact the Europeans. But from the valuation perspective, yes, you can't deny developed international emerging markets very cheap relative to the US. You just want to be careful that you don't get stuck in that value trap. Be cautious, don't overweight.
Hopefully.
Let's get a little bit more clarity around the global economy.
Why is it not saying we've got any viewers?
See that negative impact that we believe is going to happen in the US on the remainder of this year and the economic growth.
Well, I'm sorry, you said negative impact, you're talking to the economy here in the US?
Yeah, we're not as optimistic as most are on the economy in this perfect soft landing scenario. We think that instead, growth is going to continue to slow. The consumer's getting stretched. They're getting, as we mentioned.
Don't wait to get rid of the
some of
bloody picture, guys.
We're starting to see crash. From the labor market.
Don't know, get rid of picture.
This is turning the other way. So we think that the economic environment in the US.
What's your job
will be
now?
Challenging for the rest of this year. It's also being fed
Well,
in a very
comfortable.
difficult situation because there's these exogenous factors that are keeping inflation elevated. Like I mentioned.
Come on,
I've
big
seen
things,
things
mate.
that's
Keep
going
making
on in the
people
Red
come back.
Sea, and what this means for shipping costs.
Did you
If
do
you
that?
look at the
Well,
service index today that we got, yes, the prices paid component did come down a bit, but you're still looking at prices paid in that index in expansion territory since March of 2020.
You know,
These
can
things
you,
can be inflationary, so the Fed's walking a very fine line here.
All right, I'm making, gonna have to leave it there, always great to talk to you, Megan Horn, and CIO over at Burden's Capital Advisors, and I'll start, we talk about a market that has really been assessing over economic conditions are, and just trying to sort of front run the play here, but I think Megan brings up a good point here. If it's about the national disinflation, the Goldilocks, and the soft landing, whatever it is, and we're using this year, then where does that leave the market here, and where's the position?
Yeah, it's something that we haven't really had to consider the last couple of weeks when the market was making a new high. And we'll say the default scenario now is no landing.
Yeah, the data seems to support that, right?
Yeah. If you look at the ISM services numbers, they kind of show.
It was just online. I thought he was doing all that. I got nothing to do that.
Not as robust, particularly because of diet. Put on the sun, and then so does the side was our salvation, but that's not there, then that's why.
Yeah, well, there's supposed to be a handoff and we're not saying that.
Yeah, right, no handoff, and now we got earnings season winding down and the thing, I guess they're gonna hunt them up now, right? I mean, they have nothing in front of their way.
You know, I have a feeling that Jay Powell's not gonna put it quite that way.
No?
Not that-
You're not a run them up kind of guy?
No, the opposite of what I'm like. Imagine.
I like it, we'll change the pace for Jay Powell. Stick with us here, we're gonna full breakdown of all the big market moving events.
Beyond the bell, Emer's comprehensive cross-platform coverage of the US market closed.
And we're minutes away from the end of the training day. Romaine Boston alongside Scarlett Boone. We're counting it down to the closing bell. And here they'll take us beyond the bell. It's a global simulcast. I believe I have a Carol Master sighting right in front of me. We're glad to have you back here, Carol Master, back in the saddle here. Unfortunately, you came back here, one of the worst sell-offs that we've seen in quite some time.
Yeah, it's interesting though. What is kind of blowing my mind here a little bit in the last half hour or so that we actually saw some investors come in and do some buying. So we kind of bounced off of our lows. Yep, we're down across the board and some broad-based selling, but nonetheless, investors coming in and tip finding some opportunities.
Look, Nancy File over at Essex Investment Management, we just spoke to her and she said, not surprised at all to see a day like this. In fact, she was getting concerned, Scarlett, with this level of complacency because, nothing ever goes up in a straight line. Although she did say that she expects something to kind of be sideways at this point until June when we do get, which she believes to be the first rate cut.
Until June, moving sideways, so
You
that's
must have
gonna be
ended
some
up.
pretty big swings in
Sure.
the time.
Yes,
Yes,
yeah.
exactly. I'm looking at the main.
That's how I don't know.
One
person watching.
higher, and again, that's
It's cheers in there.
1%, but will we have
And
Tesla
also-
and Apple continuing to drag down that overall big tech?
Subscribe,
The idea now, they are starting to fall. Right, 100 did trade below the 20-day average 1 point here on the session right now, holding just above that here as a gift. The closing bells in New York. It's going to take a while for these numbers to settle. We're really just start walking through these now. I'm actually going to start with the NASDAQ, the composite down about 1.6% here on the day. The 1.8% here on the day. That's off of the lows. So not only were they below their 20-day moving averages at 100, but also this idea here that you also been one of the worst days that you've seen going back to October. Nevertheless, this is going to be the worst day since January for the NASDAQ. The S&P down 1% on the day. The Dow Jones Industrial Average also down 1% on the day.
Don't exchange that.
This sounds familiar. Russell 2000.
Can
Down 1%.
can I see,
I'm gonna stop you.
get rid of, so it's just your top feeling that news.
I don't know.
There's less here.
To the downside today, 80, to be exact, and Star was up 20, actually gaining some ground, one unchanged.
All right, let's look at how the individual sectors for consumer staples and financials as a standout. Energy quarters of 1%, consumer staples getting a lift from Target. In terms of decliners, tech, real estate investment trust, and consumer discretionary are leading to the downside. Within tech, there are 4 names that have lost at least 5%.
Wow, that's pretty significant in terms of downside. All right, let's go to some of the individual gainers. Believe it or not, I found some that actually held up fairly well. Target, your number one gainer in the S&P 500, to its highest in nearly a year. That one at its highs up 13%, still finishing the day about a 12% gain. So really holding on to most of the day's gains, reporting fourth quarter EPS beat the average analyst estimates driven by operating margins. That's important, as well as better than expected comp sales. That's really important. And you also have Target launching a new paid membership program. Before I go back to individual gainers, should we do Ross Stores because it fits with the retail theme?
Yeah, we should have bouncing around here in after hours trading. We're higher just a second ago. Looks like they're digging that back up. But they beat in the most recent quarter, that fourth quarter EPS coming in at $1.82. The street on average was looking for $1.65. That's actually a big beat, and it's a big from what we saw versus the prior quarter. Sales also increased significantly, up about 16% to about $6 billion in the quarter. The street $5.8 billion here. I'm not quite seeing the forecast just yet. I'm going to take a little bit deeper into this to try to find it and get an explanation here as to why the shares went out back into it.
Barbara Randler, the company CEO, saying that she's pleased with the quarter sales and earnings results, well ahead of expectations. The sales were driven by customers' positive response to improved assortments of quality branded bargains throughout the stores. Also saying that the improvement in operating margin, which was a 165 basis points, was due to strong gains when it comes to same store sales. Also, freight costs that were partially offset by higher incentives. So they had to put more stuff on sale, but
Bitcoin's falling fast again.
That forecast real quick. Sorry,
We'll go into the poorhouse.
So they're looking at comp sales of 2 to 3%. Increase the street on that.
So it's looking at a north.
3.31, so relatively in line.
Mention that it also appears your stock buyback plan.
Oh no.
What do you mean? In fashion, right, as of late. And you've got stores, maybe on that news.
I'm in it to see if I can load it up.